Welcome everybody to the Clear Shot Trades channel. My name is Peter, and in this video I'm gonna give more detailed examples how I implement my strategy. I call it follow the money. I'm gonna give some examples on the higher time frames, and then we're gonna dive deep into the smaller time frames. So you will be able to see how things look on different time frames, how you can spot things earlier, or how you can see the bigger moves on the higher time frames. So before I start, I want to make the disclaimer that I'm not a financial advisor. I'm not telling you how to trade. I'm not telling you to trade at all. This video and all of my videos are for educational purposes only. I'm sharing my experience in trading and I'm sharing information that I find valuable. So, let's begin. On the screen, I put it 4 vertical lines. I chose those moments on the price section. By the way, this is the Kusama's price section versus the USDT, Tether USD. And the chart is on 45-minute time frame. So first we're gonna start with the red vertical line. On the 45-minute time frame, I can say that is a higher time frame. It's close to the 1 hour time frame. We're gonna look at that situation right here. What's going on here? We see that money, we come from a downtrend, and the money flow is start to curve to the upside right here. And yes, the price action is following right here. It's going down, and it makes a bottom here, right? So on the RSI, we see that the trend is reaching the oversold region right here. One time we have a move to the upside. It's basically when the price when the trend reaches oversold region and the money flow is already bottomed, like it's deeply here, and it starts to change its direction like this, there's a good chance that we're gonna see a change in the price action. So we always have to scan on different time frames, and I'm gonna dive into the smaller time frames. But firstly, on the 45-minute time frame, we see touch on the really below the oversold region right here, and then on the RSI we are making a higher low, a confirmation for an uptrend, and we're going up. But what's happening next? That's the important thing. On the RSI, we see that the strength of the RSI, the trend of the RSI, we can say, is reaching the middle region right here, but it don't go confidently above it like this. It's consolidating here. It can't go through the middle line, the blue line, the white line, excuse me. And so we're making tops right here on the middle line. And after the third top, you can see here 1, 2, 3 tops. What's going next? What's going to happen? We're gonna see a rejection right here. But the money flow is still going to the upside like this. So money are going into the market. Okay. Here we see another uptrend, another top on the RSI, and then we're going down like this. Basically, here is an interesting example because the RSI went confidently above the middle line, like you can see here. It went confidently above. It went down to test it, and we can really see a bottom, a green dot for pointing for a bottom on the middle line here. But the thing is that money flow wasn't strong. The people weren't buying confidently. So if we had a strong, steady flow on the money flow oscillator here, let's say if we reached something like this, steady above, that confirmation here, that green dot that you can't see anymore, will serve us like a support, and we most probably gonna see an uptrend. But that wasn't the case at that point. You see no volume here. There's no volume, no buying pressure, let's say. So the RSI went down, and we see that the price action is falling. Okay, the next example is that bull line here, and that's the complete the opposite example. So here on the red line, we didn't have after the red line, we didn't have volume, we didn't have buying pressure, and the price action went down. In that case, here, the RSI is again coming from the oversold region. Here makes top, rejection on the middle line, rejection on the middle line, rejection on the middle line, but it's finding a bottom again right here, and then it's going to the middle line. It's going to the middle line. I'll clear this, and after we made the top here, it's going for confirmation down, and what we see, let's do like this, we see a green dot, a bottom on the RSI, and then we shoot up. But the biggest sign for this is that you see money started going into the market steadily, and then an uptrend is formed. So basically, whatever the RSI is not the main thing for a trend. The main thing really are the money, where the money are going. Are they buying or are they selling? So no matter what's happening on the RSI, if the money don't confirm the move, the price action may not happen. So in my analysis, I look firstly for the money flow, and then I go for confirmations on the RSI or on the buy and sell indicator. You see that here made really good signal shortly after the bottom on the RSI. Let's just go back and see what happened the previous time. Here we saw sell signal here, short pump, but as we said, no volume here, and downtrend. Not so accurate like here, because if you opened a trade, then the price went up, you were in a loss, and if you close the trade here, you miss the move because you weren't patient enough, but that's okay, because it's easy to say that when the price action had happened and I'm just observing the chart. But if I was in that position like this, I'm not seeing the picture. I'm seeing just this. Let's say I'm seeing this thing, and I don't see really the money. I'm scanning at that point on the lower time frames. So from curiosity, let's see what's happening on the 15-minute chart. Sorry for the whack. On the 15 minute, right here, what we are seeing actually, it's not good enough to spot it. I'll go on the 5-minute chart, but I have to scroll back a lot. Really a lot. But I'm almost there. My PC is lagging from all the stuff. And on 5 minutes, I don't see many things except that. Look this. Ignore the buy and sell signals. I'm gonna remove them. On the 5-minute chart, we see a decrease in the money flow here, and they go down. So if we were here, actually we opened a short here because money going down, RSI going down like this. It's a good position for a short. You see, money going down, RSI making lower highs, and price action is falling. But here we see a curve, the money flow curving back to the upside. RSI making actually like this, making higher lows, another confirmation for the uptrend like this. But then after this high top on the RSI, look here, the RSI is making really high peak above the overbought region. So it's not that big of a rule, but from my observations, when the RSI makes a very high top, this here is on almost 80. There are examples that it goes almost to 90, 95, let's say. When we see that high peak on the RSI, or vice versa in the below the oversold region, maybe closer to 15, 10, 5, whatever, there is a high probability that the price action will change its direction rapidly, and that's maybe most accurate on the lower time frames, because on the higher time frames, if the money flow is steady, we can see a correction, maybe a decent correction. But if the money flow are steady, even though we see a correction like this, if the money flow here was steady over the zero, so people were buying, the sentiment in the market was bullish, we're most probably gonna see next move to the upside, because people are buying the dips here. But that wasn't the case here. So let's remove all those drawings. That was the case on the lower time frame. I'm gonna back to the 45-minute chart. I'm gonna remove that brush. Okay. We saw that example. Look like this. It's actually a very good example. Very good example. Because after the support here, close to the middle line, the white line, we saw the good uptrend, and look what, just look how perfectly it is. It's curving. RSI curving too, and we see a downtrend. Nothing more like. And when will the downtrend stops? The downtrend stops when we see the money flow is bottoming. Maybe here, let's remove that. It's bottoming down there. Stayed below, and the RSI is above the oversold region. So if you are shorting here, somewhere here, you can close your short trade. You can close it here, but it can go even deeper down, even more to the downside. So the best confirmation for a change of the trend is the money. If the money were curving like this, probably will make the same. So maybe here is a good, that region here is a good sign for a close. I can say even here. You see the money are going up. RSI, it's sideways. On the price action, yes, at that moment, sideways and starting on uptrend. Anyways, that video is getting too long. We haven't gone to the small time frames yet, and maybe I'm gonna make separate video for the small time frames, because nobody gonna watch 1 hour video. So let's move to the white line. Excuse me. White line. Why did I point it? Yes, I remember why. The white line, you see here, we're coming from a small uptrend. We're peaking somewhere here, going down. When the fall is going down also, going down. And that was an interesting example on the small time frames, because here on the 5 minute I'm gonna change it right after that. We had a small uptrend, yes, but on the higher time frames, what we see is that the money flow is steady below. Yes, here was the curve. You didn't know actually that how this thing will happen. I'll remove the white one now. Remove the white one. And here on the RSI, we find a rejection. We have a rejection on the middle line, so continuation of the downtrend. Money flow is curving to the upside. Small move to the upside. Then another rejection on the middle line. Small move to the downside. Here we have a bottom. Money flow is going down, falling, and then here it curves back to the upside. What we see now, interesting, we see again RSI going above, conquering, let's say, the middle line, making tops, and then it finds support back on the middle line. And why that's important? In the beginning, you can't predict anything until that happens. Let's say that happens. You see that curve here. The money starts to go into buying, let's say, really confidently. So they're going up. In the beginning, price action isn't falling that much. I mean, yes, it's going up. We can see it's going up. It's okay. Here it's consolidating. But the spark for the big move that happened here, that move, the reason, let's say, for that move is first because after we saw money going above the zero line, they started skyrocketing, let's say. And we have a triple support, one support, two support, three support here on the middle line. So confirmation for an uptrend. And what we see now, we're actually seeing RSI in the overbought territory. Overbought. Money start to go down. That's on a 45 minute. On the lower time frames, I'm gonna go on the lower time frames. Let's just remove those borrowings. Let's go on the, let's say, 15 minutes and see what's happening there. Here money are going down like this. So I'm making the point that it's very important to scan on different time frames. Very important. So you see on the higher time frames what's happening, but if you don't find enough information, enough data to analyze there, to see what's going on, go to the smaller time frames, see what's going on there. But the thing is that you may find information that is frustrating. You see, money flow is going down here. Yes, but if you decided to short somewhere here, the price is consolidating, going sideways. Nothing is happening really. I mean, if you are scalp trading, if you are doing high leverage trades on the 2-minute, 3-minute time frames, you are making money here because those moves, they are 1.5%. Let's say here is even smaller. How much is that move? 3%. They're nice trades on leverage, on high leverage. It's nice trades, but trading on high leverage and small time frames, this is extremely risky. I don't tell you to do it because you may lose a lot of money, really a lot of money, because you have to have really a lot of experience to be able to read all the things that will happen. All the time frames, you have to be experienced. Don't try it. If you're a beginner, if you haven't observed the markets for a long time, don't even think to trade on a high leverage on small time frames. The chances are that you're gonna be completely destroyed. So I'm giving this information just for examples related to the strategy, because in my live streams I'm gonna play on different time frames. I'm gonna leave the charts on the screen on different time frames, and if you are watching and you wanna analyze for yourself, knowing that information from this video, from those examples, you can see how I'm thinking, how I'm analyzing things, how I'm using both the money flow oscillator and the RSI, how important are the regions, those lines overbought, oversold, and the middle line. It's also very important. You see that even though the money flow is going down here, the money are missing, let's say. They are not in the market at that time frame, at 15-minute time frame. If we look at the, let's say, 2-hour time frame, if we see here on the 2-hour, they are just, the money flow is steady. So guys, really scan many different time frames. It's very important, because on 15-minute time frames we see here the money are going down, but on higher time frames we see that the money flow is steady. So what we see? Steady money flow. We see RSI above the middle line, confirmations above, and boom. Now RSI spend time above the RSI, above the overbought territory. Double top, we can say 1 top, 2 top. Maybe we'll see a correction like this, and if the RSI finds support again on the middle line or close to the middle line, we can see another move like this. And if the money start to go out of the market here like this, even though they are going out, the price may consolidate for a bit like this. But the best confirmations for me are when RSI, yes, it may find support right here, may go up again to the overbought territory, can go down, up, and then maybe for the third or the fourth time here on the overbought or close to it, and combining with the money flow going down, the next move maybe like this. I mean, every trend will come to an end. So no matter how strong is the trend, when money start to leave the market, RSI is also going down. We just look for confirmations, we scan on different time frames, and we find good opportunities for trading. It's easy when you have observed the market for a long period of time. In the beginning, it's really messy. I needed a lot of time to observe. I was trading also, but I made very stupid decisions. I made bad trades. I lost money. I made money, but in the end, I could. If you don't trade, don't follow your impulsive decisions, let's say, because they're intensive impulses. When you see something and you in your head you hear, oh, that gonna happen, the price will go there, I'm gonna make money. You won't gonna make money if you're taking decisions based on your impulses, based on your emotions, based on your chaotic, let's say, thoughts. You most probably will end on the other side of the trend, because your decisions are not based on data, not based on facts, not based on not following the money. You're basically halfway gambling. So you better be, in the beginning, better to observe the things, better to spend time watching how the confirmations work, how tops show you that it's time for a change, money flow going down, it's time for a change. First it's gonna be a consolidation, then we're gonna see it like this. And by the way, I'm gonna do another video on the small time frames because that video went too long. Thank you for watching, by the way. If you're already watching, it's half an hour. It's crazy, but it's not easy to explain so much things. Let's go to 3-minute chart, let's say. See what's happening here. So this is the price action. What we saw. Why was that big drop? On the 2 hour, we saw that the RSI was in the overbought territory. The money force was steady, yes, but here on the smaller time frames, we see going down. The next hump is smaller, going down. On the 10 minutes, maybe that's the best example. Just look, it's crazy how well it works. It's really crazy, but I will include that example in the next video because it's important. But let's see again. Okay, we had that massive move into the money flow steady. We had the trend, the uptrend. We had a correction because RSI going down, money flow curving down. We had that support on the middle line 1, 2, 3, 4 times. So after the support, we went up. But what happens after that? The most important thing for me. Let's use that here. No money flow here. Even though on the 2 hour there was enough money for, there was steady money flow. If you are trading on 10-minute chart, that was a really good opportunity because you see uptrend here. Price action is finding support, but it's not making highs. It's not confident. It's just sideways, and after the fourth maybe touch here, really consolidating. Just look, and then it's time to go down. And that was a really nice opportunity. I wasn't able to catch it, sadly, but that's okay. Market move all the time. So with this example, I'm gonna end this video. I hope it was good enough for you to understand more examples. Next one, I'm gonna make really on the lower time frames to see even more examples. I repeat myself, I'm not a financial advisor. I won't tell you how to trade and to trade at all. But if you're interested, if you obviously you're searching in Google or you somehow reached that information, that video, it's a pleasure for me to give some valuable information to someone. If you like the content that I make, you know what to do, you know the drill. Like, subscribe, bell button, oh, like Ivan says. So share this video, like it, subscribe to the channel. You'll find links for my social media, social network profiles into the description. You'll find a lot of stuff into the description. You can follow there. So thank you. My name is Peter and see you in the next video. Bye.